If you wanted to know exactly where to place $25,000 to $50,000, a medium-sized investment, to how to build your own portfolio, this video is for you. My name is Pat Mitchell. I have been a day trader for the past 11 years, and I'm here to give you high-level, free, professional day trading content, all here, again, for free on YouTube and on X. And today, as stated, we're going to be going over a medium-sized investment portfolio and how to build it. I'm going to show you what stocks you could choose, how much money to allocate per position, as well as sizing, how to pay yourself. I'm even going to pick 5 stocks. We're going to do this all together. Okay, so before we get into the medium, I do want to talk about this small investment. This small investment portfolio building video is right here. Go check it out, because if you're thinking that you don't have enough money, I don't have $25,000 or $50,000 to invest, this is where you start. You need to start with this and build up. We worked with small cap, volatile, risky stocks in the beginning, and I'm fully transparent that it is risky, okay? And there's a reason for that. When you are basically held back by whatever financial means that you have, but you still have the drive and motivation to better yourself, you have to start somewhere. So you do need to trade low-priced, volatile stocks in order to build that account. But I show you in this video exactly how to do it. And this within the first 30 days, produced 210%. And that is on the stocks that I showed in that. That is not a claim. It is verified and bona fide proof that from this video, you can even check the charts. The total between those 4 or 5 stocks went up, and basically it worked out to 209, 210%, and all within 1 month. So now let's just dive right into it. I have the charts up. You're going to need charting software. I did state that in that video. Again, if you have not watched that, please go watch that. That'll fill in some of the blanks. But with this here, we're going to set up our stock screener, and I'll show you what stocks we're going to be working with. So remember, we're going to be working with 25,000 to 50,000. I'm going to show you and start with the low range. So I'm going to work off of the $25,000 mark. Okay, so what we're going to be working with, we're going to be choosing 5 stocks, and you could choose more, but we'll be working with $5,000 positions. Okay, so 5 stocks at roughly $5,000 positions is $25,000. Now, if you're wondering and thinking, well, okay, I have $50,000 that I want to invest, and that's still included in the medium, then what can I do? Well, then you can simply take a $10,000 position, or instead of doing that, you could choose 10 stocks at $5,000 positions. Okay, so that's up to you, however you want to work it. I'm just showing you how to choose your stocks, how to allocate funds, and so on. So let's take a look at this stock screener. Just follow my cursor. Just as a heads up, where I'm speaking, my eyes are right on that cursor. So in case you get lost, just find the cursor. That's exactly where my eyes are. Okay, so we're going to work with US stocks. Then we're going to go to market cap. So you want to work with mid cap stocks. These are called middlers on this. So we can work with 2 billion market cap or above, okay? Or we can limit it to 2 billion to 10 billion. And that's what we want to do, because those are true mid-cap stocks, 2 billion to 10 billion in market capitalization. And for those of you that maybe you don't know what market capitalization is, your market cap is basically the worth of the company, how much that company is worth. So let's go and let's choose the 2 billion to 10 billion. So let's click on that. And then we want to work within a price range, because there's still really expensive mid-cap stocks like this one here, Penn, that's $256 a share. Well, we don't want to be investing when we have a medium amount in stocks that are that much. It's gonna completely draw down your allocation amounts, right? So we don't want to do that. What we want to be working with is maximum, so to a maximum price of about $40. Now, if something looks really good and it's the perfect opportunity, sure, you could bump that up to like a $50 stock, something like that. But I like to be, for mid-cap stocks, up to a maximum of $40. And I still like to be in the $10 plus. I don't want the real cheap stocks, although again, that's not a hard set rule. If there is an opportunity that is perfect, yes, we'll choose the low cap or low price stocks. So let's set our price. So in the price, we want to be, let's see if we can do a manual setup. We can. So the manual is, let's go and let's find below or equal. There we go. So value, let's put that in at $40 and apply. So now we'll have a maximum of $40 working with medium cap, mid cap stocks in the US markets. And now what we're going to do is we're basically just going to click on these and then we're going to find the best opportunities. So as I go, I'm going to obviously pause it because this can take me a while. But once I find the stocks that I'm looking for, you'll be able to just rock and roll. It'll pick up where I left off. And I'll explain exactly why I'm choosing that stock. So you'll completely understand. So if you see jump cuts here, that's all that is. Okay, so first one up for grabs, which is absolutely fantastic. This thing's ready to go though right now. And I just want to squish down this stock. So what we're looking for here is we want to find support. And what we have down in this area is a lot of support. We have support going back all the way to December of 2018, and it's retesting that level right now. Now, I'm not saying that this one is going to hold, but what I'm showing you is you want to be finding stocks right at support. So just to give you a real quick refresher in support and resistance and technical analysis. So support is that. So coming down into that level, this is support. And up here, let me squish this down. You can see we have resistance. It's put in a top there, has tested, and as soon as it comes flying on up, it comes flying on down. So basically the idea behind technical analysis, when you have support like this, guys, you will have buyers here. Now, I don't know how many buyers. I'm not saying it's going to bounce and go up a mile, but you will have people that were in this position all the way back here. Maybe they added here, even added here, and they're working a long-term investment. They will add back here. They will protect that position through volume. So how many people go into this stock, it protects that position. That's why stocks bounce at these levels. This is why technical analysis is superior, because that's where people will protect their positions. So let me clear all this up. And then let's develop a trade plan and add this to the list. Okay, so now that it's added into our medium investment portfolio watch list, because we obviously need to create a list to keep tabs on our positions. So on CAG, we have this here. Let's develop a trade plan. I need to get it right at lows here. Okay, so we have our support. Let's see if we can go back and see if there's more support on the way back and where our stop would be. So even though this is at support, we still want to give it a room to breathe. And you got to take it down to the next resistance or support area. So right there is our next support. That's how much risk. It's not a lot. It's a couple of points. Remember, this is investment. You got to give these lots of room to breathe. I'm going to basically make this a red level. So on the very first one, I'll just show you how to set up your charts. Okay, and I'll give you some targets as well. So this blue level would be our entry. This red level would be our stop. So not if it touches that. It needs to break that and confirm lower. So now let's work with these levels here. I would use that and we'll change that to green because that would be a target. And then we can keep coming up at these specific price points. So for the first two, I'm going to pay myself and then I'll basically let this run all the way back up into highs. Or close. You can put a target way up here. That might be a little greedy, but you understand. We need to pay ourselves back into support or resistance, depending if you're shorting or going long, and we're only going long in these positions. So on this here, that's how I would work this trade plan. So let's say tomorrow morning it gaps up. It opens right where my cursor is. Wait for it to fall back into the previous close, which is right about there. And that's where you would enter. Okay. And then as it comes up, you could even pay yourself here because that is a gap fill area, and then really get more patient with it. But like I said, I'm only going to go over full trade plans on this, and then I'm just going to draw with a drawing tool the rest of these trade plans. I just want to give you guys, make sure that you guys are prepared for this. But that is CAG. Now let's allocate some capital towards this. So if we're looking for a $5,000 position, let's work out how many shares we can take. And at our rough entry, it's about $20.50. Close enough. Okay. So $20.50 times, let's go 350 shares and see what that works out to be. So that's $7,000. That's too much, right? So let's go $20.50 times, let's go 300. That's 6,000. It's getting us closer. You get the idea? Like, this is just how you allocate and find out how many shares you want to take. So $20.50 times, let's go 270. Let's see if we can get that. And there we go. That's really close. You could go a little bit less, make it a nice even number of 250. So 250 shares at $20.50 equals 5,125. There you go. So you could, right? So in this case, you could on CAG take 250 shares. That would be your allocation of your capital. Okay. And that gives you roughly a $5,000 position. It's a little bit more. That's okay. But you got to remember too, the lower entry point is $20.31. So you're looking at a little bit less than that, about, I don't know, whatever that would work out to be, about $5,100. So right in that point. And now you kind of get the idea of how you would allocate. So we're going to take 250 shares of CAG, and I'm just going to write that down just so I don't lose track. 250 of CAG. Okay, now let's keep going, and I'm going to continue on and find our next stock for us, guys. Well, and here we go. That was nice and easy. Next up to bat is LKQ. So LKQ, if you actually take a look, it is coming down. It is holding this support here, right? So it's holding this support. There is support here, and there is support here. There's a lot of support there in that price point. It fits the bill. It's $37 a share, right? And then you got to look at your volume for these ones. We want less volatile and more consistent stocks with volume and growth. Okay. We're okay with still a little bit on the risky side, because we still need to build this. Like, that's the idea of building. We can't be looking for, 3 or 5% returns. We definitely want more than that. And on volume, we definitely want to be in the million share plus range. And we could have put that in our scanner, but that's all right. So basically, and I'm going to clean this up, I'll show you a trade plan that we would use. So this is our main support right here. Market opens up. Let's say it gaps up here, pulls back into the previous close. We enter. That's it. This here, we could apply a stop right there. I'm going to wheel this back and just make sure, check our next technical level. We could give it to here. There is some technical support right there. That would be our stop. So right in this 3480s would be our stop. This one has real tight risk. So initial entry is at about 37. We would add into here as well. And then first target here, secondary target there. We'd have more targets, and a real greedy target way up there. So our maximum potential on this one, from our initial entry up to first target, is 8%. secondary is 15%, and it goes as high as 21%, which is what we want. We want to make about 20% per stock. Now, that's just your initial targets. Now, because we're way at lows at like some serious support with a potential of this going all the way up here, like way up top, there's a lot of potential. Next major range up here, you're looking at 45%. All the way to this range highs is 62%. So you have a maximum potential of 62% in that, which is a beautiful, beautiful growth. So that is LKQ. Let me add it to this list. There we go. So now we have our second stock. Now let's do some math. Now this is a more expensive stock, so maybe as we go, we find another stock that, it's maybe a little better and it's less expensive so we can get more shares of it, right? But for now, I'm just taking you guys through. So let's find out how many shares of a $37 stock. So $37 times, let's start with 200 shares. $7,000. So that's pretty expensive, right? So $37 times 150 shares. So that's 5,500. Let's go down a little bit more and try and keep it really right into that. So $37 times 120. It's a little bit low, but you get the idea. We're going to go with 120 shares on this. So that is LKQ. LKQ at 120 shares. So now basically all you're doing is you're writing down as you're picking these stocks, you're allocating your capital. So then in the morning, you know exactly how many to purchase. Now I'm going to keep going. Let's choose the next one, guys. Okay, next up is AES. This here is holding some support and it's also coming down further into major support. So on this one here, again, you would want to be risking off of these lows. Okay. And you might be wondering, well, if my risk is here, but it's here right now, what do I do? Well, again, we have to be comfortable with adding into that position. You don't want to just throw all of your shares at it unless you're right at that support level. So what you can do instead on something like this, and this is a less expensive stock as well. So again, same plan as before, we have our support and then the previous close because we do want to get involved with it because it's right at, lows and support right now. So let's find out how many shares first that we can afford. And then I'm going to go over how to average in on something like this. So a nice little side lesson for you guys. Let's go 5,000 because that's our position divided by $10.50. Nice fast way of doing it. So we can get 476 shares of this. So let's call it 476. So I'm going to write that down on my notepad below. So AES 476. And on this, because we have so many shares to work with, we can really work the position where we can start here. Let's say we would want to go with half size starters, so 200 shares. You could go less if you wanted, but I'll just keep it nice and easy. So the next level down is here, right? And I would want to add in my next 200. So I'd be in at 400 shares. And then right into my risk, right? If it doesn't want to hold that, then we would stop out. But if it does want to come down. Remember, that is major support there. So you have to have faith in that support. As it comes into that support, you could add your last 76. It'll correct that average just a little bit for you. But remember, we're not looking for immediate resolution and it coming all the way up here. We're not looking for that. We're looking for longer term holds on consistent growth. So on this one here, this has a big, big potential on this one. So if we were to work out our potential, we'd be looking at upwards of these ranges. And then obviously our first range here. So this is target 1, target 2, and then target 3, our greedy target. Let's do some figuring out on what that would be. So from here, where our initial entry is, up to here, that's already 30%. So that's a really nice one. And then target 2 is 91%. Target 3 up here is 120%, let's call it. So there's a lot of potential in this trade, right? So I definitely want to add this. I really like this play for a medium investment. And now I'm going to add it to the list. So AES, definitely a banger. I like this one. And now let's continue, guys. So next up, we could go with UWMC. Remember, I'm not showing you and picking out companies that like I'm saying are like rock solid companies or anything. I'm going strictly by technicals, and that is it. So on this one here, this one is definitely, we could not really give it into lows. There would be a way of doing that. But this is where you would want to be maybe a little more patient. And on this one, I would choose an entry down in this area. I would wait for that entry. Now, if it takes off, it is what it is. You have to be comfortable with that. There will be plays that you will miss. But this here, you always have to be thinking about your risk, because this would be your stop. Well, you could give it a little bit more than that, right? Here, we could put our stop, but this would be our initial entry, our secondary entry. So we need to wait for it to come down into this, if it does. So that is $3.50. And our stop would be $2.77, right around there anyways. So we can figure out now how many shares of UWMC. One sec, I just want to UWMC. So let's figure that out, folks. So 5,000 divided by our entry is going to be $3.50. Let's just call it 350. So that equals 1,428 shares. That's a lot. So we have a lot to work with, okay? So you can decide whether you actually want to put in that many shares, okay? So maybe just because you can afford to put that in, which is a nice little lesson in restraint, you could take a $5,000 position, or maybe only take a half size position and save another. But for the sake of this, we're just going to do a full size position. So on this here, as it comes down into this level, I would probably start in with about 750 and then leave my remaining for here. So 750 and 730, 740, whatever it works out to be. I'll put it at 730, although I don't think that's quite correct. It's probably less than that, like 600 and change, I think. Something like that. My math might not be the greatest on that. That's why I use a calculator, but you guys get the idea. So on that, that is number 4. So UWMC has now been added to the list, and let's keep going. Okay, so on this one here, I want to show you guys a little bit different, where it's not so much right at like low support. Maybe we have trend, okay? So this might be a little more advanced, but that's fine. You can see it's come into trend. It is working this trend. And I'm not saying exactly AXTA. I'm just saying if you have a company that you do want to invest in, maybe you do know of a company that's a rock solid company and you've done some research, but it's not at lows, like I said, well, how do you get involved with it? Well, it's still at support. There is trend support. But what you do need to watch for is if this breaks, it breaks that trend. What you need to watch for next, because you could give it your risk to here, so all the way here, and maybe even a little bit lower, it's fine, let's say, right? As it comes back up, you need to be patient. So this is where confirmation is, and I really want to zoom in and show you guys, because this will save your ass. So when it comes back up to test that trend, now you got to give it some time on it, because it can pull back and hold either this or this. But if it breaks back below that support, okay, because it's coming up and it's retesting, what you really want to see is it pop through, pull back, and remount that trend. You can always add into your position there, because she's a winner. But if it pops up, rejects, you do need to start watching it, because you don't want to give it all the way down here for your risk, okay? Because it's proving that weakness. So if it comes down and holds this, it can come up, remount, and push, like I said before. Down here, you don't want it below. your last line of defense. That's how you have to look at support. So if you have any more questions about support and resistance, what I do recommend is join us over at Trick Trades. It is our day trading service, but I am masterful at technicals, and I can show you things that will blow your mind, and that will save your ass in these positions. I do recommend being a day trader first and then investing, because then you have the rules of engagement under wraps and under control. You have your emotions under control, because that's what I work on as well. But with that said, if you feel like you don't have the time, that's okay. But you should get educated and at least sign up for a month and go over all the educational material. Now, if that's still not your bag, that's okay. That's why these free videos are here, right? But you do have to like and you do have to subscribe. Absolutely. I think that is only fair. But on this position here, where we are going to be entering, that is about a $30 position, okay? So let's add it to the list. First and foremost, AXTA. Now let's figure out how many shares we can take. Clear this off. It is a $30 position. So 5,000 divided by 30 equals 166 shares. So on this one here, as it comes down into this trend, I'll show you how I would enter in this. So on this one here, as it comes down into that trend, or simply because it's very close, if it gaps up, pulls into the previous close, you could start in or wait for trend. Don't perfectly wait for that trend. Get it as it's coming in. You could get in with your 166 shares. If you wanted to save a few, so let's say you wanted to just start in with 100, maybe you save some from here, you add in another 20, and then you add your remaining into your risk, your additional 46 shares. And that's it. That's all there is to it. So let's talk about a couple of warnings for you guys, okay? Because I have to do my job. Now, I know you've heard all this stuff before. Never invest more than what you're willing to lose, okay? Don't do that. And the reason for that isn't what you would think it would be. It's because you need to be very comfortable in these positions. We are trying to build for our future. I understand that. And we want to make financial moves, right? But we need to do it intelligently. Don't be in a rush. Let's say you're not quite ready for the 25,000. Go with 15, go with 10, go with 5. Go with something that if you lose it, if it was thrown out the window, it's not going to kill you. It's not going to destroy you. Don't do that. Also, make sure you're checking volume. You want to be in that at least 1 million shares traded daily with these. And I would, even though I know we did choose a couple of lower price stocks, we did choose one that was $4 a share. Probably stay away from those. I'm just showing you charts that I would choose. So again, if you have not watched the small investment portfolio building and you only have $5,000 to start with that. As you build it up and you build that to, let's say, 10,000, 15,000, then you can move on. You need to clear those positions off, get into lower risk stocks, which are your mid caps. I don't want to say it's a race, but we want to be getting out of those small cap bullshit stocks as soon as possible. When you make these big gains in small caps, you're going to fall for the trap that a lot of people fall for and continue to throw money into them. Because you made 100% or 200% on a small cap stock, you're going to believe that you can keep doing that. And maybe you can, but at some point it will catch up to you. There's reverse splits. There's horrible news. There's delistings. There's all sorts of shit that happens with these small cap stocks. You want to get involved with medium and large cap stocks. So remember, this is a 3-part series. The small portfolio, medium portfolio, and large portfolio. Next portfolio, we're going to be working with 100,000 all the way up to $1 million, and I'm going to show you how to work those positions. It's mainly going to be focused around $100,000 to $200,000 investments, because I know that there are people out there that do want to invest larger sums of money, and I'll show you exactly how to do that. So make sure you like, make sure you subscribe, and turn the notification bell on so you know when it comes out. It should be out in a couple of few weeks. And if you do want to learn how to become a trader and get some education under your belt so you're not going into this blind, which I do highly recommend, and work with a coach that can actually help you, that's been doing this for over a decade, come to tricktrades.com. And if not, please continue watching this free stuff. That's why it's here, guys. And I hope you enjoyed this. Adios.